Eric Mwade for the weekend of July 12th and July 13th, 2014. Let's take a look at how the US markets closed on Friday. And you can see pretty much an unchanged picture, the biggest mover being the NASDAQ, which was up 0.44%. And also you can see that crude oil was down 2%. And importantly, we are looking at the VIX pulling back 4% in Friday's session. Now, if you take a look at the market on a week-to-week basis, you see that for the week, S&P 500 was down only 0.9%. The NASDAQ was down the biggest with a 1.57%. If we take a look at the Dow was down the least, down only 0.73. So that's how the markets closed for the week. Let's call it a down week, but not necessarily the worst down week ever. Let's take a look at the NASDAQ weekly, and we can see that this week we actually came back to the previous buy point of 43.36. So that buy point there was tested and successfully held. It also happens to be an area where we have an upward trending 10-week moving average, which is positive. So on a price action basis, the market held the previous buy point, so you can claim that that was good enough for the market to eventually move higher. Now, the problem with this market here, we see that it's failing at this level here on the RSI, which is what we've been watching, and we have uniform action above that line and back below it. We've been expecting that to be some type of a pullback area. We seem to be getting that. And also you can see it's a back test of this line here. In case you can draw it like that. So it's a back test of that line on the weekly, which is a failure point. So the best way to look at this is, as long as the market is holding above the previous buy point, anything above that range or above that previous buy point area would suggest that the market is healthy. So let's not get too aggressive on the short side or even think about going short just because the previous buy point was tested and it held. So the bulls eventually did manage to hold the market together. And also don't forget that the MACD, the main MACD, continues trading above zero, so the momentum continues to be to the upside. If you take a look at the daily, you'll see that same type of formation here, and you can see very clearly here that the support held on a daily chart. So support held on that line there about 2 days ago, and so that is good as long as the market is trading above that level of 43.57 on a daily chart. That's good. Also, this line that has been on my chart here is holding, which is also a good sign of strength. So that line is holding there, and you can see that the 50-day moving average is ways off. So we still have support that can come at the 50-day moving average with a market pullback. So all to say, the market, yes, it can pull back, but we haven't seen the worst sell signal. You can also see that there's some type of a daily support now. If you take the lows of the RSI, you can see that support is coming precisely where you'd expect support to come for the market. Now let's take a look at the NASDAQ 60-minute chart, and we can see here that we seem to be holding above this 120-hour moving period. So this is holding, which is okay. And also you can see that we made a short-term lower low on the hourly and an improvement on the RSI. We are also back above this line here on the RSI on the hourly, which has been good entry point. You can see every time you bounce off this line, you had a good entry point in the market. It bounced off the same line, good entry point. We've now moved above that line there, suggesting that the market has the opportunity, if it wants to move higher. The one thing I can say here is that the main MACD is still below zero, so the market does need to push back above zero if the MACD is going to confirm upside momentum. So if the MACD stalls below zero, that's not good, but if it can trend back above zero, then that's a good sign that the bulls have the market back in control. Let's take a look at the Dow weekly, which the weekly for the Dow is bearish given the close, just because this line we've been drawing on the weekly chart has given us triple top as of right now. So as long as this line is confirming resistance on the top side of the weekly RSI, one can expect a pullback, because not only is it a resistance line, it is also negative divergence because you are making higher highs on the weekly chart, but the technicals are making lower lows. Also, one thing to note here is that we made a higher high on the weekly for the Dow, and you can see here that this level on the RSI, so all-time weekly closing highs, but the RSI failed to go above 61.8 on the weekly chart. So that's something to consider, because that eventually could be telling us that we've probably seen some type of a short-term or probably even long-term high. So we always have to wonder whether the market is ever going to recapture that 17,000 level on the Dow. I guess we'll have to wait and see. If you take a look at the Dow from a 60-minute chart, you can see we seem to be trading in this channel here. So the market has been constructive. The most recent push lower sometime this week came back to this line here and held. So that channel is holding. Also, this level is where the market has been bouncing, right here. And you can also draw it this way, connecting the lows on the hourly. And you can see the market bounced off this low here on Thursday's sell-off in the morning, and once it hit that level, the market started at least hour-to-hour moving higher. So I think the market is setting up to potentially moving higher, because you can see the coiling of the MACDs. One of them is above zero, but the main MACD does need to be above zero if the market is going to continue to confirm strength. If you take a look at the S&P 500 weekly, we see here that for the week we are back below 69.10, and that's actually one thing I should have talked about. You can see that on the Dow, I guess on the NASDAQ. The NASDAQ moved back below 69.10 on the weekly RSI. That's why we were sure that the market was going to have a down week. And you can see the S&P 500 also did the same thing. Moving back below 69.10 can be tricky, because that could suggest that markets are looking to go down over time. We also see that this week the S&P 500 confirmed that this was the week before, which was July 4th weekend. The market closed above that channel, and this channel has been held since 2011. And this week we are moving back below the channel. That's usually what happens whenever you have a fake move. So it is still conceivable that we've seen the highs on the S&P 500 also, because once it moved above the channel for 1 week, and then immediately the following week, which is this past week, it came back below that channel. So maybe we've seen the highs, maybe not. I guess we'll have to see how the week is gonna go, especially this second week of July. S&P 500, and I guess I should have said the second full week of July. If you take a look at the S&P 500 on the daily, now this line here, simple line, was a nice entry point on the way up, which was this breakout level. Very simple. And what you do is you extend that line, and you can see every time we've been bouncing off that line, we've had short-term lows, especially if you're a day trader. And right now we are very close to that line. We haven't broken below that line, and so that line could continue being support. And I'm talking about the previous highs line is now turning into support. If you take a look at the S&P 500, we continue trading and holding above the 50-day moving average and the 33-day moving average, all to say that the market still continues to have momentum. If you take a look at the S&P 500 hourly, you see that very clearly, that this line here is where the market has been bouncing. And if you follow the arrows, you can see every time we bounce off this line, we make a short-term low. Bounce off that line there, short-term low. Bounced off that same line, short-term low. Bounced off here, short-term low. Double bottom here, short-term low. And you can see this past week we hit that line multiple times, and now you can argue that the market wants to move higher. The only thing we are waiting for here is for the S&P 500 to move its main MACD back above zero. That's the only thing that needs confirmation. Once it can move above zero on the hourly, that confirms that the market is ready and preparing to go higher. Now let's take a look at the Dow Transports Weekly. and you can see for the week they closed back above 69.10, or at least they held above 69.10. We'll see whether the new week is going to push it back below 69.10. So it held early in the week, it was below 69.10, but seems like it managed to hold above that. Anything above 69.10 is bullish. Anything below that is probably the beginning of a pullback. And you can see even longer term, this market can pull back and all the way back to this support line here before bouncing higher. So it's going to take a lot to break this market, just because any pullback that bounces off this line is still going to be a constructive pullback within a broader bull market phase. Now let's take a look at the VIX, because the VIX daily is giving us a sell signal for the VIX, buy signal for the general market. And the best way I can show you is just show you the top side of the RSI like that. You can see here this seems like uniform action above the line and back below it. So that could be a trap. I guess we'll see how that goes. And if you take the daily closings like that, the daily closing high here and this daily closing high there, do a straight line, you can see that we've been rejected on this new line here. So, you know, my thinking here is that even if you consider the hourly for the VIX, you see the same type formation here. We've been talking about the resistance might come at this top side here for the VIX. It hit that level and is recoiling. That's one we take a look at. So that's one resistance line, and the other one is a red line here. So that red line is also confirming resistance there. So it would make sense, given this chart, for the VIX to pull back and for the general market to at least be stable, maybe even move high. I know that's a surprise. It surprised me because I would expect in the VIX to actually have broken above this level here, but it failed. Also, if you take a look at Appl here, just as a bellwether, you can see that the stock is still holding above the buy point of 91.48. It is also trading above 69.10 on the monthly. So it continues being a buy because the breakout is now working on month number 2 above 91.48. As long as it's trading above 69.10, I would expect the stock to continue pushing higher. Now, the one thing I have to go back to is if we take a look at the monthly charts for the NASDAQ continues holding above 69.10, which is bullish. S&P 500 continues holding above 69.10. As you can see here, S&P 500 trading up about 77, which is bullish. And you'll see that the Dow is also trading above 69.10 on the monthly, which just all this to say that the market continues being strong on a monthly chart. So the worst charts are the weeklies, and the monthlies are still continuing being very strong. So we have to conclude that given that the monthlies are strong right now, the market continues being okay. If the monthlies move below 69.10, then maybe we might start rethinking that idea.